Good morning. Welcome to Meet the Masters of Insurance webinar series. I'm Lawrence Keller, founder of Four Advisors Only. This is the 33rd of what we expect to be a great many webinars with Canadians who have dedicated their careers to learning the art and science of insurance sales and service. Webinars in this series are now scheduled through the end of this year, and more are being added to the schedule daily. Over the years, I've observed that every successful insurance agent whom I've met has succeeded differently, even if they're in the same field, deal with similar clients, and even if they're related or in business together. This is what makes the sale and servicing of insurance one of the best careers that I can imagine. It is possible to become a success in our business with diligence, integrity, and experience. With this webinar series, we intend to prove that any type of person can succeed with time and hard, thoughtful work. Our goal is to create a video record for each of these masters of insurance so that some of their expertise and experience will be available to anyone who'd like to learn from them, whether now or into the future. Today, we have Steve Meldrum with us. Steve is the founder and corporate insurance specialist of Swell Private Wealth Ltd. He primarily works with accountants who integrate insurance solutions into their advisory practices. He's also the author of Estate Planning with Life Insurance, published through Wolters Kluwer. Steve currently serves on the board of directors for the Conference of Advanced Life Underwriting, CALU, and he's a member of the Canadian Tax Foundation, Family Enterprise Canada, and the Society of Trust and Estate Practitioners. Additionally, he's enrolled in the Chartered Professional Accountants In-Depth Tax Program. Steve's an authority within the Canadian insurance industry and frequent contributor to industry and accounting publications and events. He believes that simplicity brings clarity, and he seeks to address tax, estate, and legacy complexities through this lens. Barry Pascal will be interviewing Steve. We have now booked interviews through the end of this year. If you know of anyone who we haven't spoken with or you think would be a great person, a great master of insurance to be interviewed, please contact me and let me know. Thank you, and over to you, Barry.
Thank you so much, Lawrence. And Steve, before we begin, I just want to take a moment to thank you, Lawrence, as I do every time, for all the time you've devoted in your career to all of us to help us in our learning and for creating this series. So thank you so much, Lawrence. And now it's my pleasure to introduce Steve Meldrum. Steve, you know, I learned a lesson many years ago, which is there are no friends like your community friends. And Steve and I got to meet because of our involvement at CALU. And so if not for our involvement at CALU, we might not have met. And I'm so grateful that we got to know each other. So Steve, I'm so pleased to be here with you and for everybody to have this opportunity to hear from you.
And we were lucky to get the 33rd episode. So this is like double lucky number.
Exactly. And you should always be double lucky.
Yeah. So
Steve, we always begin by asking how you started, how you found the industry, and yours is a very interesting story.
Yeah. I mean, in answering that question, it's always like, how far back do you want me to go? But I'll say it started with Boy Scouts. When I was a young kid, 12 or 13 years old, I had a scout leader, and he came to camps all the time, whether we had it on a Wednesday or a PD day. And when he came to camp, he also brought Smokies, which I grew up in a family of 7 kids. So, you know, we had hot dogs. That was our luxury. But when you saw a guy bring in Smokies to camp, you thought, wow, this is impressive. And over time, I learned that he was a financial planner, but really there was 3 things that stuck out to me that I really appealed. First, he could help people. In my case, as a scout, he was helping us become boys to men. He also had freedom. He could come to the camps, right? He could be available. And thirdly, he had the financial resources, in this case, to buy Smokies. But all 3 of those things, the helping people, the freedom, and the financial resources were appealing to me. And so I shadowed him. I said, well, you know, what do I need to do through high school? And I would shadow him a little bit through coursework. And I decided early on, I wanted to be a financial planner. So I did that. I went to university because he said, well, you should get your finance degree. So I got my finance and marketing degrees. And then I said, well, what's next? And he said, well, take your securities course. I remember doing that really quick. I did it in like 28 days, just compressed it because I'd already taken university classes. And from there, I said, okay, I'm going to join. And what I did is I worked in Calgary for a couple, 2, 3 years, and then finally decided to move back to where I'm from, which is Medicine Hat. And I said, let's partner together. And as I did, I started as a financial planner. Okay. And I think some of the backstory, like my parents are both school teachers by training. And so they always taught me to critically think, ask questions, investigate things, the good and the bad. And that just meant that I always was trying to read as a financial planner. There's so much to learn. So I was reading, looking through things. And then
Well,
one
you're
day,
one of the most curious people I know.
I just like to understand why, I guess. Yeah. But then one day I was reading at night. I remember reading an article on some estate planning, and then all of a sudden I read about the capital dividend account. I know this sounds cheesy, but it blew my mind away. I said, this is ridiculous. This is crazy. Both the CDA from non-taxable portion of capital gains and the life insurance proceeds. I went into the office the next day.
So, Steve, I just want to pause
Yeah,
you there
yeah.
because we've spoken, so I know this story. That seemed crazy, but even crazier was what happened next.
Oh,
You go to the office and you
yeah.
ask people about it,
I,
right?
I asked everyone about it. I said, hey, this is crazy. Do you guys understand capital dividend account? What do you know about it? And the one fellow didn't know really anything. He was a newer planner, like a few years. And the other one, which had about 30 years, said, yeah, it's something with life insurance a bit. I don't really do much of it. And I don't, I can't speak much to it. And I thought that was nuts that they didn't have an understanding of the capital dividend account, even as financial planners. And so for me, it just meant I got to figure this out myself and I got to learn. And so, uh, I would try and consume more information about the capital dividend account. And at the time, our financial planning office of a few advisors, I mean, our high year was like $17,000 of premiums into insurance. So, like, no one was doing it. In fact, I would have said I started not with a good taste about life insurance, thinking, it's, salespeople, I don't really understand it. Uh, Maybe I was the same, but the capital dividend account changed my thinking. It changed the way I wanted to investigate things. So maybe from my parents being teachers, I just kept asking questions, asking questions. And
So
then, sorry, it's a long story, I guess, but, and then from
great
there,
story.
um, as I would try and learn, I was once invited to kind of a small group with one of the insurance carriers. And I think it was 10 advisors over 2 days. And it was all about postmortem planning and tax planning. And I loved it. I just thought this is amazing. Like I cannot get this information from anywhere. No one's having these conversations. Like this is phenomenal. And afterwards, I was talking to one of the organizers and I said, where do you get this information? Like I've been looking and I cannot find this kind of quality. And he said, well, have you ever heard of CALU? And I was like, no, I don't even know what you're talking about. And he said, well, CALU is a bunch of insurance nerds that meet out in Toronto. And then he went on to say, you should investigate it. And I did. And I said, well, need to become a member. There's a bit of an approval process. In my local town, there was only one member and he wouldn't return my phone calls or emails. So I had to get some other recommenders, but I joined CALU. I remember showing up. I didn't know one soul there, but it was the place that helped me gain technical knowledge and, sequence that thirst for um, learning about the capital dividend account. So that's the background, I guess, on how I got more focused on the corporate owned life insurance.
So let's take a moment on that then. If you combine the values that brought you to Scouts and the influence that you had from this leader, and especially the three components that you pointed out, that seem so obvious in retrospect, but as a young person, to recognize that you were interested in having freedom, lifestyle, and helping people.
Mhm.
And then what you learned from your parents as teachers, those values. How does that impact on how you practice today?
Oh, it's huge. I mean, I think everyone, for the most part, will give kudos to their parents. Um, yes, they were teachers, but some other lessons. I'll tell you a brief story about the bean rows. So I mentioned how there were 7 kids in our family. We grew up and my dad had arranged for us to have 3 additional gardens in the town where we'd go to an old lady's house. My dad would say, we'll pay for your water bill if we can use your garden and you can eat as much vegetables as you want. So many days during the week, I would have to go to the garden with my brothers and sisters and weed and pick. And I remember going in the bean row, and there was my 2 younger brothers and myself with my dad. And I had done my row, and then I was complaining that my other brother hadn't really done his much. And I remember my dad saying, you just worry about your row. You don't need to worry about anyone else. And in some ways saying, you do your job and you do it the best you can. And if I need to help your little brother or someone else does, or you have to help them, like, don't worry about it. You just worry about you. And maybe one other lesson from the parents is there's probably a lot on food here, but also when I was probably about 15 years old, I worked for a local farmer for a few weeks of picking corn. And this is a funny story where you're picking corn for like 12 hours a day. There's a tractor going behind you and you're manually snapping it. This is, 20 years ago, but you're snapping the corn, throwing it on the conveyor belt, and it's chasing you. And there was many foreign workers that were a lot faster than me. I remember coming home and I could not, I came home, I was so exhausted the first day. I literally just flopped on my bed and fell asleep. I didn't even eat supper. I just went right to bed. I woke up the next morning and my wrists were like locked here. They were frozen. I couldn't move them. And I remember frankly saying, I'm not going to work, and having discussions with my parents and even crying and saying, I can't do it. I can't do it. It's too hard. And, I still will remember my dad saying, and look at me and he says, look, Meldrums don't quit.
Mm.
And I mean, I had to, with that, basically shut up and go back to work. And I worked for the next few weeks till the season was done. I later found out there was about 30 other kids that were my age in the local community that had tried that and only lasted a day or 2 days. And there was only 2 of us that ever lasted that season. So those lessons of my parents, like, don't quit, never give up. And also of like, worry about yourself, you be the best you can be, I think really set me up for, what I do on a day by day basis. So, I can do the best I can and give clients the decisions and choices. But as long as I know I'm doing my best, then I don't have to worry about it.
Talk about a life skill.
Yeah.
If there's one lesson that a young person can learn, it's that lessons of resilience, of staying with it.
Yeah.
And I remember when I came into the insurance business, I went to London Life Newman School, and we had a speaker. And he said, if you meet anyone in this business who didn't tell you that they considered leaving it at least 10 times, he said, they're lying to you.
Yeah.
And, I think it's those moments when you're most challenged
Oh,
that
yeah.
present the greatest opportunity.
Yeah, for sure. And I mean, I feel like as we evolve as advisors and try different things, they're not always successful, right? Like, but you have to evolve, you have to change. I mean, I'd evolved more away from being a financial planner into more of the insurance world, and there's a natural transition there, and you have to change the client relationships, and you have to bring in other people and try different things.
So, how has your role changed over time? And how do you build these strategic alliances, these people that you work with?
Yeah, good
Tell
question.
us a bit about Swell and
Yeah,
how.
yeah. So, over time, originally, again, as the financial planner, we identified the evolution was, hey, we're traditional financial planner. And then we noticed the professional market. And we spent a few years, probably 4 or 5 years, focused on the medical and dental professional market. And that was good, but there was a lot of other competition in that space. And largely through seeing other advisors at CALU and listening to conversations, and also with the professionals, we learned that the accountant was the most trusted advisor in the client's mind. And so we evolved and said, well, we need to make sure we're forging relationships with those accountants early on and making sure that we're doing planning alongside with those accountants. I'd also had some earlier experiences with accountants where when we did advise a client with good, solid vanilla planning, I had an accountant out of Saskatchewan that said no, and he wouldn't even listen to the proposal or have a discussion. And his comments were basically, I don't believe in insurance, and I think it's a scam, and I don't want to do it. And my clients, I'm going to tell them no. And he wouldn't even listen to us. So we learned from both.
What do you do?
Pardon?
What did you do?
We couldn't do anything. I mean, we told the client, and the client, for the most part, clients lean on their accountants. And so we learned from that case that we've got to really make sure that we're doing the planning with the accountant. And so again, as we've focused on insurance, we always try and bring in the accountant early on, make sure we understand what they're doing, making sure we're not crossing over what they're doing, and make them part of our planning and communication with the client. It's, if we meet a client in the first 3 minutes, we're finding out who their accountant is and trying to get agreement that we can collaborate with that accountant. We're big believers in collaboration. We think that you can have a better solution when you do collaborate, both with the other professionals and even internally. So,
Well, I think that's a breath of fresh air. And so much of what I see out there is highly transactional and totally based on financial engineering.
yeah,
And here you come with this holistic approach with a foundation of collaboration. And, I think in our own practice, and, my dad, Bill Bell, is on listening to you. And I told him, wait till you hear Steve. But, one of the lessons we learned was, why put a client in a position where they have to look at a recommendation and say, okay, I want to go and discuss this with my accountant or with my lawyer?
yeah.
Wouldn't it be so much more comfortable for the client and reassuring if we went and met with them before and then they got a joint recommendation from us all? And so we like to work by consensus in the way that you're describing.
Yeah. And it's not always easy because there's a big spectrum we've learned. Like we've also spent a lot of time to learn their language, learn their dynamics. The more time you spend with accountants, the more time you'll see that, there's the bean counter accountant and there's the tax specialist accountant, and there's a big range in between. We've found different approaches work for different accountants, and sometimes you may not be able to spend time, or it's not just like a client engagement. Some clients are more advantageous to work with and others aren't. So the same holds true with an accountant.
So tell me what you do when you're speaking with accountants, because it seems to me you're not just focused on client situations when you're engaging with accountants. You're doing a lot more. So tell us about that, because it's quite unique.
Well, with accountants, they're not trusting, right? And so their default is to be analytical and critical and even say no, especially when it comes to insurance. So we feel that education is power. So we try to educate the accountant at the pace that they can take, and educate them about insurance, identify the bad, some issues with insurance, but also identify the opportunities with insurance. And over time, my business partner, Rylan Olson, has taken a big lead on developing a course. So we actually have a course for accountants that they can take, and they can receive education, learn about those issues, learn about the opportunities. They can get CE certificates for it, and they can also participate in a community, which we facilitate, that can help answer questions even before we're working on a client case. We feel that building that authority and accessibility with them is a great tool because we want to become a bit of a household name brand. We've also tried to align with other authoritative resources for accountants. So in the bio intro, we've taken over authorship of estate planning with life insurance. And that's a book that's used by Step Canada as part of their curriculum. So that's been a big boost because it becomes recognizable. Um, we've also done just, I think, yeah, about a week ago, we did a podcast with CPA Ontario. I think it comes out in December or January, but we try and be in the places that accountants see naturally. And when they do see it naturally, then they can become familiar with us and essentially go from knowing us, liking us, and then trusting us. And then when the client scenario comes up, they'll say, "Oh, no, I've already seen you guys on Video Tax News, or I've read your book," or and so they know our approach is to educate them, uh, have the authority, and then it's a lot easier. So we're less sales and more solution driven when we're meeting with the accountant.
So let's unpack that because you said a lot of interesting things. So
Okay.
first of all, you're designing programming for the profession,
Yeah.
and they're looking to you as a resource where they're learning.
Yeah. Yeah. 100%. I mean, in the insurance world, especially corporate insurance, uh, we take we take simple things for granted. So something as simple as ACB, we know adjusted cost basis. I sometimes will ask an accountant and an early assessor to say, "Hey, what is your understanding of adjusted cost base or adjusted cost basis?" And I would say the majority of accountants don't know the difference. So that then launches into a great discussion of collaboration and saying, "Oh, that's good. It's a little bit different on insurance, and this is how it works. And this is why it's important. If your client's going to transfer a policy, if they're going to take money out, so on and so forth." So we try and use some familiar terms with them, but ACB is different if it's a investment cost base, which they're used to, versus in the insurance world, a basis. So choosing simple, um, somewhat familiar things to build upon and build a foundation. And then they say, "Oh, I didn't really know that." It's like, no problem. Most people don't. And then again, applying the practicality of it helps them say, "Huh, I'll have to watch out for that." And then down the road, they start asking us other questions. What would you do in this? Or what are the issues with this situation? And then we can provide that comfort to them.
I'll bet especially post-June,
Yeah.
that's an even more valuable conversation, right?
Yeah. 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 There's, accountants, as I talked about earlier, understanding their language. They have a lot of language that we would be familiar with too, everything from the Bear Trust to Eiffel rules to TOSI to AMT. There's a lot of terms that if we can be familiar with those terms, they're going to help us have better conversations with the accountant.
Right.
And if you can get the accountant on board, then it makes it a lot smoother with the client because of the amount of trust that they have with the accountant.
You talked earlier about authority and then that breeding accessibility, but I think you're
Sure.
doing the reverse. I think it's your accessibility that's building your authority and making you that go-to call, the person that the accountant can say, "I know who to call to get this answer."
Yeah, it could be. When we were talking a couple days ago, we also talked about just asking, and I want to give a story that we came up with where um, illustrates how even with accounting, it doesn't happen overnight. You have to put yourself in those positions where you can maybe have another conversation. There was, many people are familiar with Kim Moody. Kim Moody has been a speaker at CALU and in the industry, and he was in Calgary. We knew of him, but we didn't really have much of a relationship with him. He came out with his book, How to Make Life Less Taxing, and we I read it, of course, and then I thought to myself in the foreword, he listed his assistant of 20 years. And I said, "Huh, I'm going to reach out to the assistant and I'm going to ask her if we could get Kim to sign some books for us. And then we'd share them with different accountants." And they agreed. Rylan and I thought that we'd have, 2 minutes with him. He'd just sign them and leave, not give us much time. But it turns out he said, "Yeah, let's sign your 30 books and He talked to us and spent 30 minutes, 45 minutes with us, asked, who do you want this book made out to? Who do you want this book made out to? So on and so forth. But that was the start of a relationship. And then we entered into his world. And then we had a reason to follow up and say, hey, can we order some more books? Or thanks for doing that. And could have dialogue with him. In a short period of time, we were able to participate and be on a panel for what they used to call Moody's Tax University. So they put on a full PD day with accountants and lawyer, and we were on a panel for Moody's Tax. And from
Wow.
there, we built further relationships. We were able to present to them on different strategies and topics, but now to their broader team, which gave us more authority. That opened up other windows and opportunity where Kim was able to recommend us to speak at a accounting tax conference here in Banff. And, just those relationships we made early on, but we first had to ask for those relationships. And now we have a great relationship. We can text him, talk to him, and collaborate. So it's been wonderful. That's just one example.
I think it's a great example because it also highlights something that's so quintessentially you, which is when I observe you at the board meetings, for example, you don't just have passing conversations. You're really interested in who people are and where they come from, and then understanding what they're trying to accomplish and how you can sort of work together, how you could be helpful. Talk to me a bit about how that works, not only with the professionals, but in your client relationships. Now you meet clients. Tell me what happened.
Well, we just yesterday, we met with a referral from an accountant. This is interesting, but we were going to a different city and going to have lunch with the accountant. And in the morning, we're going to meet with the client that he had referred during the summer, and had a couple exchanges throughout, but we're going to meet with them. It's a lot easier when we come in, the client, the business owner, medium-sized business, was, didn't know as much. So, okay, you came from the accountant. Why don't you come up, tell us what you want to do here? And almost felt like they were like, give us your pitch, and then we got to move on in our business. We slowed it down, and I'll give kudos again to Rylan Olson, who is my business partner. He's phenomenal at asking questions and slowing down the discussion so that we can scratch a little bit further and say, well, you tell us what it is you might be looking for. Why don't you tell us of, why that's important to you? And so we try and not, just say, here we sell life insurance and this is what we got to do and transact. We're trying to figure out, what is the right timing for you? Why do you feel that this is something you should take action on? That allows the client to disarm, and then we can just have a more thoughtful and reasonable conversation because we're actually consultative instead of just selling them. So we did that yesterday, and it was phenomenal. And the client engaged further because they could see that we actually cared. They told us more about their business. They told us more about their concerns with life insurance and the timing of it. And we could frankly say, yeah, you know what, right now, and they'd been pitched by 3 other firms. But again, that's why the accountant brought us in. The accountant brought us in to say, you need to help the client, protect them, make sure nothing goes off the rails. But it's nice because we say, look, we don't have to go fast. We can spend the time we need to. And you might purchase this at different times or multiple times. So asking questions, trying to figure out what the client's real problem is super important.
I think the takeaway there is this concept of slowing down the conversation. I think that there's such emphasis on getting a transaction done. And can I get it done in 1 or 2 meetings? And here you come after, as you said, they were pitched by multiple firms.
Yeah.
And you're saying, well, before we get to the insurance and before we get to the pitch, tell me about your situation.
Yeah. And sometimes it's hard because we do want to do the insurance. A few years, well, probably 4 years ago, I remember we had a dental professional, extremely good situation, a young gun that was basically debt-free, 30, and making about 600,000 a year. And in their fact pattern, yes, we could do insurance. They wanted insurance. They agreed with the insurance. But because of a series of factors, we backed and said, maybe right now for your immediate goal and how you want to do this, you should do a capital strip. Back then, again, 4 years ago. And so we said, let's talk to the accountant. We'll collaborate with them. And we said to the accountant, look, client's ready to go ahead with insurance. We want to, but we think this is their primary goal. So that at the time, I think it was about $100,000 premium that we walked away from to hit the client's first goal. They did the capital strip, paid off some personal last bit of debt, which made them debt free. They felt so good about it. And then within the year after that, we ended up doing about 175 of premium between him and his wife. And so the little bit of delay helped us do a bigger solution down the road, but it also helped us sleep at night because we hit the sequence in the way that they wanted. And the clients had a great relationship with us since. And in fact, it was just last year when we had met with them over supper, they said, well, what's next? What's next? Because they've almost funded some of their insurance. So they're
So
looking
you
for us as a
changed your position. You became a trusted advisor to them.
Exactly. Yeah. Yeah. We want to be consulting for solutions, and that holds true with our client and it holds true with the accountant. We are not going to make those decisions for them. We like to provide information, make sure that we bust any myths, and back it up also with some technical expertise as needed. We don't want to just, say things arbitrarily. We like to back it up, whether it's, in the Income Tax Act or other references. We like to make sure that the client and the accountant feel real comfortable. One of my favorite things to do is provide the memo. Accountants are used to having memos. When they give instructions to a lawyer for a freeze or anything else, they're providing memos. We like to provide memos to the accountant and the client. And it's not that different from your reason why letter. You should be essentially providing the reason why and, your approach and your analysis with the accountant. And you can do that through an easy memo.
Lawrence Geller once did a session on compliance, and he asked me to join the panel. And I said, Lawrence, why me of all people? And he pointed exactly this out. He said, because you don't just do compliance. You use compliance as part of your process, and you introduce accountability to your clients and confidentiality to your clients and safety to your clients through your compliance process. And I think that's what you're doing as well.
Yeah. Yeah, we're trying to. I remember watching you, so maybe
Were you?
I took that chapter out of your book. So, but it's been helpful. The more we can operate and behave like an accounting firm, the more they trust us. So even when we work on files, just like an accounting firm, you don't just have one person. We always have two advisors on our files. Rylan and I will look at every case and we will go through it, and we have different opinions and we don't always agree, and that's okay. But we can run it through that process and we can feel that it's vetted properly so that we can bring that solution forward. Accountants, they have managers and then they have partners, and the partners sign off on it. So there is a sequence of making sure that, or some benefit to operating like an accounting firm, again, in your structure, providing memos, providing communication. And as a result, we know when they need certain information. For example, if they need year-end values of cash values and adjusted cost basis, we try and be proactive where, a week after year end, we'll provide our one-pager infographic and all those values. So funny enough, 4 or 5 months later, when they ask an email, hey, can you send us these values? We're like, no problem. We sent them back 3 months ago, but here they are again.
So you do an infographic when you do the year-end information.
Yeah, we have a template, which is very simply, explaining a bit of adjusted cost basis and the death benefit, how they operate together, and then just quick values. Here's the policy, the current death benefit amount, the current ACB, the current NCPI. Because if there's any collateral deductions or if it's corporately held, they're going to want that information on the balance sheet, right?
We have a lady that runs our office named Benatofi, and she built a process all around these year ends and proactively ordering that information, because typically it gets requested very close to time. If you send it too early, it gets lost. But
Yeah.
if you have it ready when needed, it's so valuable. And when needed, it's too late to ask for it. So we
Yeah.
just had a situation yesterday where a partner from one of the firms reached out to me and said, could you provide as of June 30th? And Mena wrote me right back and said, as a matter of fact, we pre-ordered this, but it's always been May 1st.
Mhm.
Are they sure that they want it June 30th? And when I wrote to the accountant, he wrote me back immediately and said, oh, thank you so much.
Yeah.
It was just a mistake, right? And that would have been 3 weeks delay or 2 weeks delay to get that information, because it's 5 or 10 business days, and then could have delayed their filings.
Yeah. Well, and that's the key. You actually cared. You cared for your client, and then you cared to communicate it to the accountant in a kind way. And you guys were working together on it, and people appreciate that. We found that communication is key. The more you can communicate, the better, right?
So let's drill down on this concept, because you mentioned you're always 2 advisors on your files. And one of the lessons I learned from my dad is when you bring people to the table, if you're bringing the right people to the table and you're listening, then great things happen. And so we have people that we're very proud to work with, like Mana at our office. So I know that you're 2 advisors who are working on every file and challenging each other and questioning each other and thinking about the client. Who else is on your team?
Yeah, we're
Well,
small.
and then who do you work with when you bring in expertise?
Yeah, good question. I mean, the reality is we're small. We we are just 3 people, 2 advisors and 1 assistant in-house anyway. At one point we thought we would take over the world, and we said, well, let's hire more people and more people to facilitate what we need and data and all that. But through COVID, I mean, it's hard to hire people that are as fussy and picky as us. And it takes a lot of time. And so we actually doubled down on a decent amount of technology in our CRM, and we try and use our CRM beyond just scheduling, right? But actual workflows to help us even trigger some of that process, say for year end. So we have a lot of automations that probably help us. Although we're a team of 3, we always say we try and operate like a team of 10, because we've got our processes and systems trying to support us throughout it. That's internally. Externally, we would use, obviously, we work with accountants, so we've gotten to know various tax accountants and tax lawyers. And I participate in organizations like Sept Canada, CALU. And so you meet other people where when you have frequency of time with them and collaboration, you can pick up, you can call them, can text them, you can email, and they're willing to give you a few minutes here and there just to help move that file along or progress it. And oftentimes you get to work with them on the end result. You might need their expertise to actually help the client.
I
So
found over the years, you talked about the different layers within firms. And when I first started, I would get phone calls from friends of mine who worked at a firm, had to report to a manager, and had a 30-page presentation left on somebody's desk. And the manager said, the partner said to the manager, figure this out. The manager said to my friend, could you please translate this to English? And so I might get that call. And sometimes you're getting that call because they'd like you to participate in the file. But sometimes they just want you to be a resource.
yeah.
So talk to me a bit about your time and how you spend it with advisors when they call you, and the ratio of time that you're spending with prep, the client's advisors, and the client themselves.
Yeah. So, I mean, that's a loaded question. I'm just thinking about when we obviously over time we know which advisors are sharing both ways on helping us and helping them. So it might be a little more informal when we're able to have the level of trust and frequency that we collaborate, that we can just help nudge along. So we'll spend time, but it's usually, 10, 15 minutes here and there. If we might have a new advisor or a new accountant, we'll try and understand what it is they need. And we have people, like beginning of the year, we had a couple accountants reaching out to us about specific offshore strategies and understanding them, because they were getting like 10 proposals on their desk. And, we can't just provide everything for free. So we said, yeah, we are happy to engage. We can give advice and thought, and here's our rate for that type of engagement, because it requires expertise. So sometimes things are informal. Sometimes we'll say, no, you can engage us, or your client can engage us. We had another accountant that had a client that her husband passed away, not ours, but they said, can you be a second voice or do a strategic review? We said, sure, we can. And here's our engagement and rate. This is what we would do. So we try and balance the just being an available resource for everyone for free versus respecting our time and capacity, so that we can both be thoughtful when we do respond, but also have the time to do the proper research as appropriate to whatever the question is, right? So it's this fine balance of those two worlds. And your question was loaded, so maybe I have to repeat some portions of it, but.
And then in terms of the time you spend with the advisor, the time you spend preparing a file, and the time you spend with the client,
Yeah.
what does that look like?
So from a high level, I'd say with a client, we're trying to just figure out what's their objective, what is the outcome they want. That's their focus. They're usually not getting too technical. With the advisor, the accountant or lawyer, we're going to try and ask similar questions. What is the outcome you understand? And this is what your client's telling us. And then maybe the path that you think that you can accomplish that. And then we'll try and introduce the insurance and say, well, have you considered insurance? And so depending on their level of knowledge, we're just trying to figure out, what are you trying to do? What are you trying to plan? And if we can supplement or bring in insurance and show them where it might work or it might not work, then again, we become the trusted resource. Sometimes that exchange with the accountant, because they already know, like, and trust us, can be very quick, and it can be a 15-minute conversation. Just yesterday after lunch with the two accountants, I said, oh, hey, about the shareholders agreement, it was actually a manufacturing company. We said, on that shareholders agreement, Mr. Accountant, the client that I talked to, that you referred us to, we haven't done any business, said that the shareholders agreement wasn't progressing because they were waiting for you or the tax accountant. There was a third party. And, that exchange said, no, we're waiting for a certain bank to switch ownership of one of the company's loans. And that was just a simple 5-minute exchange, or less, actually. And then we could communicate that back to the client. So we find that maybe it's from our family enterprise advisor training, but we try and coordinate a little bit to make sure that everyone's on the same page. And sometimes that's 5 minutes. Sometimes that's a deeper dive. There are accountants that want to go through more detail, but we always want to make sure before we go through detail, we want to make sure we understand what they want and the client wants, because then when we show the details, we can attach it to each priority that the client and the accountant have.
Steve, the thing that's always impressed me about you was it's almost as though the price of entry for you is technical excellence. But the thing that distinguishes you is your level of caring for the advisors that you collaborate with, and caring for clients' needs and making their lives better. So let me ask you, in terms of how you go about doing what we do, compared to the industry, where the industry was, where do you see the industry today, and where do you see it going?
That's a good, that's also a loaded question. I think
I
that,
load them all up in advance.
yeah, exactly. And feel free to interrupt me, but I think there's huge waves and changes in our industry because a few things. Um, in terms of tax planning and accounting, accountants are running out of tools in their toolkit. The government has made such changes that a lot of the planning and structuring they can't do anymore, or they can't rely on it anymore. So there's risk for them to give advice. And because of that, one of the last standing things is life insurance used in estate planning and capital dividend account planning. That's one of the last tools in the shed. And because it is, there's a lot more attention to it, and therefore attention from clients, attention from accountants. So accountants are getting pulled into insurance conversations more than they ever have, and they don't have any other tools to use. So there's accountants that are looking for understanding, and there are also accountants looking to monetize this event and and participate in the insurance recommendations. So we see the trend as basically accountants or accounting firms deciding to either partner with an insurance advisor, or they're going to bring it in-house and do it inside the accounting firm. There's obvious barriers to bringing it in-house, like compliance and costs to bring on an estate planner. But we've worked with firms that have done that we've worked with directly and still do, but they've brought in-house financial planners, wealth management team, and estate planning specialists to do this planning. So the big trend, I think, is this convergence of financial planning and accounting being pulled in together. So you're going to see more accountants, in my opinion, showing up to life insurance events because they're also getting tired of being a traditional accountant. There's so much AI coming. Bookkeeping services are going away. They're getting exhausted with keeping up with all these tax changes. So life insurance can be appealing from the standpoint of the simplicity of affecting it. So that's one of the trends we see in the industry. But on the counter side, I think, although I like being technical, is not every accountant wants to be technical. It's very hard to be technical as an accountant and keep up with all the changes. There are a lot that can do it, but there's also a lot of accountants that are getting tired, and they're saying, look, I can't keep up with these tax changes. So they're looking again for other services. Maybe they'll do advisory work. Maybe they'll do estate planning. Maybe they'll do insurance, right? So there's accountants that are even leaving their profession and taking up the insurance banner.
And in that way, differentiating themselves and venturing away from the commoditized services.
Yeah. Yeah. And they have a lot of relationships. Like these accountants, especially if they've been in the world of tax, they've got some good relationships, so they can put up some good policies very quick and very early on and get back some control of their time in their life, which accountants in the last few years have been losing.
So before we turn it over to Lawrence for questions, given where you see the industry going, and certainly potentially pressure, competition, and/or an opportunity to collaborate with accountants coming into the industry, the wealth management world coming into the industry, what advice would you give to someone who's coming in today, a new advisor coming into the industry today?
Yeah. Well, I'm a big proponent of make sure you know what you're talking about. So I would try and learn about life insurance, and I would make sure you have a good understanding of it. I would also talk to accountants, and you don't have to try and be the big resource up front, but you can tell them that you want to form relationships with those accountants and you want to be a resource to them. And then as you see them do different things, ask. Just say, hey, I noticed you're going to, you put on events. Is there any way I can help you with life insurance or just organizing the event? Or if they are speaking at a conference, say, hey, I saw you speak. It was great. Ask for some further clarity. Just try and create dialogue with those accountants. Those accountants are trying to figure it out just like we're trying to figure it out in life insurance. They don't, you can grow up with them and build with them. And if they're senior accountants, probably we've found sometimes, this is a little secret, I find, sometimes the accountants at the top are lonely because everyone asks for their expertise and their time, but no one's actually just talking to them as people. We've had good, I remember at one, the Moody's Tax University that I was on the panel. Afterwards, I saw a tax accountant and he was in the hallway and I just finished the panel. I was taking a phone call. And then when I was walking back in, I just had a quick conversation, started chatting, learning about, some musical instruments they played. And I just was naturally curious, I guess. And we still talk about it once in a while. And that tax accountant is more connected to me because we just had a normal conversation that wasn't just technical. So that person I would have thought was unapproachable, but I saw the moment where I could just have a quick conversation, and it built to further conversations, and they have referred people to us. So it's been great.
Wonderful. Wonderful.
Yeah.
I mean, I think, the lesson that I learned today from you is, first of all, the quality of great mentoring received and then given. First from your parents, then from your scout leader, then from Kim Moody, and then all the different professionals that you've learned with, then taught, and then worked with.
Yeah. And I want to, Barry, maybe as you talk about mentoring, I'll give a shout out on this because Kelly Adams, when he was chair of CALU, had introduced the mentorship program, and I was in the first year to participate in it. And they paired me up with Paul Tompkins, who I always looked up to on how he was building. I know he had relationships with people I had relationships with. So I was like, how is he doing this? How is he figuring it out? I've seen him present at conferences, but I wanted to know more. I'll never forget when he was in Calgary. This is a couple summers ago. And I drove up to meet with him for breakfast because he was there for other business.
Yeah, he's a dear friend, as you know.
Oh, yeah. So Paul just sat and asked me, tell me about your business. And I told him all the things we're doing and all the things we want to do. And then he just simply pulled out his laptop, put it up right there in the cafe, and said, well, what you just told me doesn't actually line up on your website because your website says such and such. And so your clients and your accountants will be confused. And then he went on to tell me about his business and how he's orchestrated it and developed it. And honestly, from that moment, we even made massive changes. Like we pulled away, we changed our website, we changed our dialogue, we changed our messaging, what we post on LinkedIn, because we saw the laser focus. And yeah, we wanted to, progress, and that mentorship was huge. So I think whether it's someone in the business, it's my parents or your parents, you've got, if you want to get better, you just got to latch on and listen. And it's hard. It's hard for us to fully switch out of that financial planning and be life insurance specialists. And that doesn't mean critical illness specialists, life insurance specialists, right?
Right.
So we learned a lot from Paul. Again, kudos to that mentorship program. And, we're trying to get better. I think that's the key.
Well, Steve, I think that's the lesson right there. Always trying to get better. And I think that's who you are. And what a pleasure it's been for me to sit with you, my friend from CALU,
Yeah.
but to learn about your process and learn about this fantastic business you've built and how you're always giving back. So I
Yeah.
just want to thank you. This
Yeah,
was
no, Barry. You're always a nice voice to talk to because you always motivate someone. So thank you.
Thank you so, so much. So I wanted to look out to the audience and see if anybody here might have a question that they'd like to ask while we still have Steve with us. I'm not sure. Lawrence?
I don't see any as yet. Steve, you talked about your mentors. Do you mentor others as well?
Well, good question. So I did participate in the mentorship program on to be a mentor um last year. Um, but I would say I get a decent amount of advisors, probably informal, if I answer that. I get a decent amount of advisors that reach out to me and they want to know this, that, or the next thing, and I'll help them. Um,
What
and
about what you do for young people?
oh, yeah, as far as like from a religious standpoint, I'm involved in a church where I help youth from ages 12 to 18, if that's what you meant, to help young men try and become better people. So there's some mentorship there. Um, I like hiking, so I had a guy, one of the youth that went up through, we'll say that age bracket, and he's now 18. It was really rewarding this last week. He said, "Hey, I want to go on a hike with my buddies. What is what are some hikes that you have?" And I know that's because the last few years we had done some summer camping and hikes and introduced him to a whole new world. So, well, I think we all have something to learn. Um, I've had a couple. I'd feel remiss if I didn't even say here. I also had two female mentors in the industry early on. I'll give a shout out to which was Harlene Day. She's now retired. She's out of Calgary and was part of a study group I was in. And then also Cindy Ackles. And she also is still in the industry. But I look, I want to learn. And if you will teach me and coach me and say I'm doing something wrong or right, I will listen. And if it's better, I'm willing to change. And I like to help people. When I see someone's willing to change, I'm willing to also give them some guidance to make it faster, right? If we can learn from each other, we'll go a lot faster than trying to do it all by ourselves. So mentorship is huge.
Are you part of any study groups? You mentioned study groups. Are you still part of any?
Yep. I'm not. I was part of a group for about 4 or 5 years, and it was wonderful. Right before COVID, we started to disband because, frankly, everyone was getting too successful and busy, which sounds bad. But the study groups, at times we'd collaborate, other times we'd bring in speakers from the carriers, some of the, people like Steve Kirpix and stuff. So we had some really top brass come in and speak to us. Right now, I find I've got a couple advisors that we'll say it's informal study group where we talk a couple times a week. Aaron McEwen and Mark Calla, good friend from CALU, Mark Calla. And I talk to these advisors and we'll talk on casework. We'll talk on client approaches, situations. So because I'm in a small town, well, one fella's in Vancouver, one fella's in Toronto. But since COVID, I think study group and collaboration in my world is real time. Like I have trusted people that can expand my knowledge, my network to answer my questions. So they're probably virtual, informal study groups at this point.
Steve, you're one of the younger people we've had in the Masters of the Insurance webinar series so far. And the reason is because you've done something extraordinary. You've created this resource for accountants. So essentially your niche market is to cooperate with accountants for their
Yeah.
clients,
Yeah.
which is sort of a double niche, which is interesting. Do you have a niche within the clients as well?
I mean, yeah, the clients, our niche, you nailed it. It's accountants and accounting firms. So those are our clients. When we talk about our clients, those are our clients. They do bring their own clients, and they tend to bring the business owners, and corporations because with Paul Tompkins mentorship and others, you know, that is our focus. That's where we add the most value. It's not on adding mortgage insurance. It's on complexity. It's on corporate or trust ownership. It's advanced concepts. But yeah, the accountants essentially are our sales force and business development officers to identify the clients that should be having conversations with us, so that when we come in, we're coming in as the consultant, not the salesperson. And we're happy to walk away or say no to something or spend a bit of time with that client because they are the subclient of our primary, which is the accounting firm. So we look better when we give the best advice, whether it's yes or no or wait, and the accountants appreciate that and they like it.
One last question. Thinking
Sure.
back to that first accountant who said, no, my client doesn't like this, I don't believe it. Do you believe that accountants reject insurance through a lack of knowledge and familiarity and the fear of being seen not to know?
Yes, 100%. They don't, a quick story, because I'm in the in-depth tax program. On the first year, they had the incorrect reference to the Income Tax Act for life insurance. I emailed them and it took 2 months for them to correct it and update it, but they acknowledged it was incorrect. They're also don't spend very much time on life insurance because there are so many tax changes in-depth. So to be fair, the accountants don't have a good fair shake to even get knowledge and information around it. So they have to look to the community. And like any community, there's always some people that have practiced and are good actors, and sometimes there's bad actors. And if you get a, you know, bad apple in a bunch of people doing insurance, sometimes accountants, they don't forget things. Remember, they tend to be critical and analytical. And so they sometimes have scar tissue with some other client dealings they've had. No accountant likes to be surprised. So if you suddenly have an illustration in front of a client or in front of an accountant, their immediate answer is shock and they don't like it because they're now put in a position that they're both out of scope and they have to get back to the client, but they don't even know how to get that information. So yeah, I think that they can be fearful, but if we can educate them ahead of time and let them know that they don't have to answer it themselves, but you can be the resource and you will hold their hand through that, giving them the tools and power ahead of time is a lot more impactful for them.
No, it's not just accountants. I recall at the time of the McKechnie budget, when they were trying to tax the inside buildup in insurance policies. And the Action Committee on Taxation was created, went up to Ottawa and spoke with the deputy minister, trying to find out why the deputy minister was so dead set against cash value life insurance or life insurance at all. Turned out his parents had had a very bad experience when he was a child, and that had colored his opinion forever. Yeah. And it was a question of creating familiarity and knowledge with him as well. Yeah. So I'd like to thank Steve Meldrum for joining us today with this very insightful and informative conversation. And Barry Pascal, as always, for being an excellent interviewer, the Frost or Carson or Merv Griffith of the insurance industry. Next week, we have a bit of a change simply due to conflict with a religious holiday. And so next week, Paul Bourbonniere will be interviewed. The following week, it will be Sandy Pollock, and then Morty Sachs, who is the substitution. Then Don Forbes, Michael Links, Ross Durant, Bill Bell, who's been referred to a couple of times today and is Barry Pascal's father, Miles Posner, Joel Kadeski, who's with us in the audience today, Paul Williamson, and then Joe Sheehan to end up 2024. I look forward to seeing you all next week on October 10th for Sandy Pollock. I'm sorry, on October 3rd for Paul Bourbonniere for the Meet the Masters of Insurance webinar series. Thank you. Thank you, Steve. And thank you, Barry.